welcome. It's great to see so many people here at 4:50 p.m. On the day of a Raptors game. That's fabulous. We are the last scene of Act 4, Day 2 of the Payments Summit. We know the organizers love to save the best for the end. So we promise you the best panel. So if you're here so far, stick on, don't go anywhere. You will hear some fabulous stuff over the next 30 minutes. My name is Dilip Soman. I am a professor at the University of Toronto, and I run a center called Behavioral Economics in Action at the Rotman School. What we do is try and apply behavioral science to economic decision-making, and therefore think about applications to industry, to policy, as well as to customer well-being. So let me just quickly take a minute to talk about how we'll do this panel, and then I will step aside and let our experts take over. We're going to do this panel in 3 parts. We'll start off with an elevator pitch. We'll then go to a debate and discussion round, and then we'll end up with a quick-fire multiple choice question round. I'm a professor. I love to give questions to all of my panelists. That's just the way I do things. And as we started thinking about this panel, and I looked at the playbook for how to do fantastic panels, the first thing it said was to bring a group of really smart people to the stage. And we've done that, right? So between the 3 of our guests, we have Starbucks represented, we have Disney, we have Walmart, we have Home Depot. You've heard of these companies, eh? Right? So these guys know their stuff, right? The second thing that the playbook says is to ask them provocative questions and then step out of the way. Right? So that's going to be my role. I'm going to begin with elevator pitches. Maria, will start with you. Maybe a couple of minutes, 2 or 3 minutes. Tell us what you do and what keeps you up at night.
Sure. So I'm Maria Smith. As it said on the screen, I'm an independent consultant, formerly with Disney and Starbucks. So I spent over 20 years with Disney in a range of responsibilities, starting from payments, when it wasn't called payments, when it was just a financial position. And I had responsibility for processors. I also launched co-branded financial products and spent a lot of time working with a partner on that chase. I also launched private label and closed loop financial products for the enterprise, and I worked globally to put together partnerships for the company. And as you know, Disney is a very well-regarded consumer brand, and so it was important to continue to elevate my experiences, so then I moved on to Starbucks, because then I knew what payments was all about, and I wanted to continue to elevate the experience at Starbucks. At Starbucks, I had responsibility for everything payment strategy, including the mobile payment experience, and the Starbucks card, which is part of that ecosystem, as well as partnerships. The reason I'm independent today, honestly, is what keeps me up at night, which is I felt that working for a brand, well-regarded brands, of course, gave me great experience. But my experience over time with partners in the financial services space, in the fintech space, and now startups, just left something to be desired. I felt like we needed a bridge between those parties. And I took the opportunity after I went to the World Economic Forum in January to see that digital innovation and digital disruption was coming, and that there needed to be this space for putting those bridges together. So for me, it's really aligning all these parties as a collaborative leader to find solutions so that there's a win-win-win-win for everyone.
So just to close the loop, that's the evil card we heard about a little bit earlier in this session.
Yeah, I forgot to mention that. I'm sorry I didn't solve that problem in China for the person that spoke earlier before I left Starbucks, but I'm sure the team will solve it soon.
We'll get there to the good versus the evil. Mario.
Sure. I'm Mario Diarmas. I handle international payments and financial services for Walmart. I work with all the international markets on trying to optimize their cost of acceptance when it comes from electronic payments perspective, and also work with them on their financial services strategy, because there's a lot of synergies between financial services on the issuing side as there is on the acceptance side for Walmart. As far as what keeps me up at night, I can put real dollars and cents to that. Walmart as an enterprise, we spend almost $2 billion a year, to accept electronic payments around the world. That's our cost. That's something to keep you up at night when you start. And I can tell you, I was here 2 years ago, had a chance to speak at this event. At that time, the number was 1.5 billion. Wow. The number has continued to rise. One of the reasons, as we move more towards the digital economy, that's much more electronic payment focused, which is a much higher cost. So that's certainly what keeps me up at night. One other interesting thing I'll say about this event, when I had the pleasure of speaking at this conference 2 years ago, I made this statement: interchange should be zero. And the reaction from the crowd was a mixture of laughter and gasping. I've been very encouraged, if you've been participating in all the sessions, to hear a lot of folks talking about alternative revenue streams from payments, loan losses, how other digital wallets are coming in and saying, hey, we're not going to make money on the transaction because we recognize the value of data. So it seems like there's starting to be a real migration here in Canada and other parts of the world as they're starting to see some of the innovation that's coming around from the world.
I was there in the room when you said interchange should be zero. I remember the laughter, so those thoughts. Andrew.
So I'm the guy who snuck on to the panel, not the smart ones, who kind of learning what interchange should be zero should be, what that's supposed to mean. I work for the Home Depot. I've been with them for 3 years, and I oversee 3 areas for the Home Depot. One area, I oversee our entire e-commerce business. That's really driving our interconnected future. The second area I oversee is our analytics practice. And the third, for good measure, is advertising. So everything from creative to buying to production of all our media across all our channels. And a lot of what keeps me up at night is actually some of the topics that the previous speakers actually just spoke about. Jose talked about the importance of having omni-channel retailers and how much more revenue they do and how much more meaningful relationships they can create with their customers. That's a huge drive for us. I think about what Mark said and just keeping up with the skyrocketing expectations of customers. That's true. It's not necessarily the last best experience you've had with a home improvement retailer, but it's actually your last best experience, whether or not it's an app like Starbucks or anyone. And so how do you actually keep up with that expectation? And I guess the third area talks about Debbie's, what she's talked about trust. And on the advertising side and on the e-commerce side, we have tons of data. How do we ensure that we're treating that data with the right respect, to trust? We're also very privileged to be, our stated goal is to be the #1 most trusted home improvement retailer in Canada and the world. We do our share in Canada, but we've also been named as the top most trusted brand in home improvement. And really what we want to do is continue to build that because we know that's what's most important for our customers, that they can trust us.
So if I can stay with you for a bit, Andrew, because your confession that you're not the expert on payments, I think puts you in a wonderful position to comment on this from kind of an outsider perspective, yet insider. And I want us to start off by thinking about the big things in retail. So kind of crystal ball gazing. Yep. Let's look at 10 years in the future. It's 2029. How are your stores going to look different? What's going to drive that change? And then we'll get into how payment is going to be the engine behind that, if at all.
Ooh, 2029.
Yeah.
I don't know if you could look back 5 years ago and predict we would be where we are today, or the rapid growth of Amazon where it is. But one of the things that I know to be true is that our brick and mortar stores will exist, they will thrive, they will be a very meaningful part of that customer journey. For us, one of the things that we've talked about is that it's really a one Home Depot strategy. And we no longer see that it's an online customer versus an in-store customer. Mm-hmm. And for us, what it's the paramount responsibility is to remove as much friction as possible. And as we think about our customers, it's evolving more beyond a single transaction and that relationship versus more of a lifetime value. Mm-hmm. And so what do we need to do in terms of investing in the solutions and experiences that you have online and in-store and making it as seamless as possible? And we've been investing a lot in terms of understanding who our customer is, where they are on that journey, and understanding that journey will bounce them back and forth from online to the stores.
So it's really the CX, the customer experience, that's the driving engine, right? Yeah. Agreements, disagreements?
Yeah, no, I completely agree. And that's actually one of the things that I'm very passionate about is when you talk about payments, the industry generally talks about payment as a single point of connection with the customer. It's really the full journey. So it's exactly what Andrew is saying. Even from the companies that I come from, payments is really just part of the equation. It's seamless. It just happens. You're thinking about the brand and the experience, the coffee you're about to consume or that you need to consume to start your day, and payments just happens. And that's exactly where I think that the evolution of this industry needs to go, seamless connection for the customer.
Completely agree. Yeah, I mean, for us, every successful visit, whether it's in our store or in our app, ends with a payment. So payments are very important for us because that's the monetization of the visit. But again, we certainly see a lot of people are talking about omni-channel now, and omni-channel and those customers being able to choose where they pick it up. They shop online, come into a store, maybe they drive to the store but never come in, maybe it gets put into their back of their car without them ever coming in. Maybe it gets delivered to them when they're in traffic. I just saw a service now there, while you're waiting in traffic, Burger King is going to deliver food to you while you're in line. So it's amazing. So it's about being able to service the customers with what they want, when they want it, in the form that they want it in. And so I think that, and that's more than just omni-channel. I think the other thing that's going to happen is, and something that Walmart's focused on, is bringing that omni-channel together to a real customer experience so that when they're interacting, they can interact with your app outside of your store, they can also interact inside your store. How do you make it easier inside your store? How do you delight them, give them more information that's relevant to them, and make their experience even better? So we also certainly see one of the commodities, Walmart's always been about everyday low prices for our customers, but the new commodity that we're also seeing for customers is time. How can we save our customers money? It's very important, but also how can we save them time? So I think that's going to become an even more important focus.
So can I build on that a little bit? Because I think, so the general playbook in retail has been there is value that people get through the experience, they enjoy it, they find products and services they like. But then there's this whole notion of, the payment is sort of a friction, it's a pain point, it's something that people don't like to do. It happens at the end of the experience. And so I remember the olden days when we worried about the long lines at the checkout counters where the agent would swipe the card and then it wouldn't go through and they would clean it with a tissue and re-swipe it. Is this all about just reducing the friction? Is that where payments will help? Is there anything else? Can we see any value addition beyond just reducing the pain of payment? And maybe...
Sure, absolutely.
Since you're nodding.
Sure, I totally agree with that. We've launched some mobile experiences around the world. I think the one I'm personally most excited about is our Scan and Go app. We have a Scan and Go app with it's part of our Sam's Club membership app. Inside the US, you're able to open the app, you put a card on file, then you can walk through the store, and as you're picking up items, you scan them into the app. Then when you're ready, you pay on the app, and you walk out the door. There's no interaction with POS at all. The greeter at the end of the door, at the door, does then scans a QR code that shows them what your receipt is, because you don't have a paper receipt. It's all digital. And then they're able to see what you have in your basket to confirm it, and then you're out the door and you're on your way. I can tell you from a customer perspective, it's fantastic. It's a great experience for me as a customer because you don't have to have that interaction at all with POS. And one thing we've seen from the retail side is we actually see a uptick. Our customers love it so much, we see an uptick in traffic. Customers who have to buy one thing and don't want to stop by your place on the way home because they know the lines are so long, they'll stop by and buy one thing because they know they can get in, scan it, and get out without having to wait in line. So the customer's experience has been so positive, it actually drives additional traffic. I think what's kind of interesting about that as well is we've started to launch that and roll that out in other formats internationally. In China, we've just launched it, but we've actually integrated it into the WeChat app as part of the WeChat application in China.
So it's traffic and basket size too. We just heard about the $1,100 onesie, which was sort of a slightly different take, which is that it's not just the fact that it's easy, but the fact that it does create value through making the whole experience seem that much more positive. Maria, I'm curious to hear your perspective. You've seen Starbucks and Disney, two very different animals. I guess from a superficial service perspective, but the same issues, I guess.
The same one. Well, I'll give you an example when you were talking about, the scan and go. So at Disney, and I should say a former resort company that I used to work for, entertainment company I used to work for, that was actually the impetus, was trying to get the seamless experience prior to checking into the hotel, and that's where the impetus of the Magic Band came from. Many people have heard of that, and that was really putting an NFC chip and starting the experience prior to actually arriving at the hotel, and how to remove friction from getting there. But it was also capturing information ahead of time. It was anticipating what the customer experience needed to be, and then along the way, how you were going to interact interact with the brand. If you were going to order food from a restaurant, could you order it, through your app and then have the NFC device know that you were there and have it delivered to you? So it was about the customer experience all in total. It wasn't about the payment. That was just part of the equation. And even at Starbucks, there was always a confirmation of it's a seamless experience, and we got a lot of friction out of the line with this mobile app, but then it became an easier way to pay or an easier way to get my order. I could plan it in advance. What if I could schedule it? What if I could gift my favorite drink to someone I knew wanted to try it? So you keep evolving over this experience. Payment just happens along the way. It's really about the customer experience you're building with your brand in the particular business problem you're trying to solve.
So if I can get Andrew to weigh in too, I think with sort of one slightly different lens, which is, these are two people that have actually been in the payment side of the world. And so it's one of those things where if you're a carpenter, everything seems like a carpentry problem. As the sort of inside outsider, does that seem like the right way to think about it? Is payment just one of many tools you could use, or are there other things? I mean, how important is this thing?
Yeah, well, I think it's actually really interesting because you look at payments and it's almost like a gateway into solving, Maria said it, like business problems, but I look at it as customer problems. You think about some of the things that we end up using with our payments. You think about our pro customer. We have two large segments at a really gross level. It's our DIY customer and our pro customers. And through our evolution now, if you're part of our pro programs and you want loyalty programs, we can actually solve that problem where if you use our app and you use our payment, we can make that more seamless for you. But then if you're using that and tracking your sales, we can actually sort and organize all your bills. So if you're that contractor and you want to figure out what are all the things that I bought related to this one project, well, I can now sort through that. So I've eliminated another problem for that customer. I can then also learn from that data and treating it with the utmost respect, but also seeing what else could I do for this? If I know that you're a carpenter, maybe I can personalize that experience for you and solve another problem for you, which it's about time. How can I make it easier to find the products and the promotions that you're looking for that are relevant for your profession? And so those are all kind of ways that we get in, but payment is almost like that gateway into it.
So again, building on the theme of kind of making this happen, this sounds great. I mean, obviously, we can create a better experience. It's profitable. Customers love you. You love your customer. That's all. There's nothing better than that. If it was so fabulous, we should have seen a heck of a lot more of this stuff happening. And so I guess the question is, from a retailer's perspective, what are the frictions? I mean, and they probably aren't. There's technology, I guess, at some level, but maybe there's a human component or an org component to it. So let me just toss it out. I mean, why aren't we seeing more of this stuff happening today?
Well, maybe I'll take that first, because this is what I experienced firsthand with the companies that I've worked with. It's difficult from a retailer perspective when there's so many things to focus on. Payment is just one other thing to focus on. So if you think about the more important things to handle in a retailer space or entertainment company space, payment should be very simple. I should be able to integrate it very easily. I should be able to get the products and services that I need from partners. I should be able to get the innovation that I need. And the reality is, it's not that simple. It's actually pretty darn hard. It's pretty darn hard to get the attention of internal stakeholders to say, yes, I want to spend money if this is not growing top line. So one resolution for that is make sure that your payment partner is providing top line growth. For example, can you onboard someone to a loyalty program faster because you have this financial product? That helps. But sometimes you're still not playing with the same deck of cards, if you will. An issuer may have one, or a bank may have one priority that's very different than a merchant. Earlier today, when I was asking for a demonstration of a new tool, I asked, what is the merchant implementation? And the person couldn't answer that question for me. So how can you be in a payment space when you don't know where the end merchant implementation happens? So to answer the question, it would be great if we collaborated all, and the reality is, each part of the ecosystem or the journey is sliced up into silos, and we need to work better together to bridge those to get to the solution faster.
So massive helpful hint for those of you who are pitching payment products to retailers. Your pitch deck should have that stuff. Rio?
Sure, I've already talked about cost, but I'll say it one more time. Cost is certainly a friction point. from a merchant perspective, as far as why do I want to try something new and innovative when it's going to actually end up costing me more once I get done implementing it? That's certainly a question we have. I think one of the things that Maria was alluding to as well is legacy systems. Legacy systems at a large merchant or even a medium-sized merchant can be quite onerous. And I think having to integrate into those is certainly something that is a challenge. Large merchants as well have limited technology and implementation resources, so they can only, rather than kind of bet on every new thing that comes along, they can only make 1 or 2 bets a year, if that. So that's certainly a challenge I think folks are going to interact with. The other challenge I think is, we're all up here representing pretty large merchants. When you look at the real commercial reality out there, the majority of the market's made up of very, very small businesses. They're not here because they're out there operating their businesses right now. They probably don't have payment experts who work for them. They usually have folks who are working on whatever their basic business solution is. So you have to have a solution, I think, that's also translatable from large merchants. It also works with small merchants too.
So I'll be a bit contrarian because I'm not there in the payment space directly, but there's an aspect of it where sometimes we don't look at it as the really sexy stuff, right? People chase after, and you've got investment dollars, we all have finite resources, and hey, I want new speed and service options for delivery, for all the products that are being ordered online or in store, and I want to be able to say, deliver this vanity to the upstairs bathroom instead of curbside, and I'm willing to pay more. And so it's almost an afterthought in terms of, well, how am I going to transact that payment? Can I make that simpler? Can I make that more frictionless? And one of the things that we found is that if you can find a way to unlock even more of that story, like for us, we have a significant portion of our customers and a good chunk of our sales get emailed receipts out of our stores. And so with that piece of information, I can stitch that together with what they've done online, both on our site, from what they've done through social media and other engagements, and I can come up again with more meaningful relationships with it. But if we need to continue to enhance that relationship in store at the payment side, again, as that gateway for us to get that information to build that relationship with our customers. But it's kind of painting and showing like what aspect is the sexy side, right? Versus, oh, it's just a pure transactional thing. It's costing us a lot of money. Maybe it's, let's just look at it as an afterthought.
So again,
payments aren't sexy. I always thought payments were the sexy. I can't believe you said that. Wow.
But again, useful advice for people who are pitching
exactly.
This new payment technology to Home Depot for sure, but retail more generally. Can I sort of, I'm going to collate everything you guys said in terms of sort of thinking through who are the early adopters of these innovations in payment. And I think it kind of collectively sounded like it's the big guys. It's the folks that have experience as the centerpiece of their model. It's the people that have the patience, the ability, big pockets, all of that stuff. It's the Disneys of the world. It's the Walmarts of the world that are going to get started. Is that a fair summary, or are you?
I'm going to disagree with you.
Okay,
sorry.
please.
Finish.
No.
I mean, actually, it's not going to be the Disneys of the world that are early adopters because they're not going to trust that something may work, and the brand is so very important. In fact, I was told many times, reporting into C-suite, executives, it has to work correctly the first time. There's really no opportunity for, MVP and then move on. So they may not. However, that's changing if you can find the right avenue to approach that brand where it can be okay to be an early adopter. On the other hand, the other company that I work for, Starbucks, they actually were solving business and consumer problems with startup companies. So in that case, they were early adopters, but it had to have a specific solution. It could have been a cost of payment, it could have been a speed of service, it could have been a business opportunity, it could have been fraud for all that mattered. It didn't matter then if it was early adopter. It just had to have a solution that provided results. Clear, tangible, measurable results.
I think one of the challenges when you're launching something new, especially with an established company, is the expectation of your brand is at risk with that experience with the customer.
Absolutely.
So if the customer has a negative, has a glitchy or a buggy experience from an MVP, you're putting your brand at risk. So that's a high level of risk of kind of trying anything new or taking anything too that's not proven or tested. But the other challenges I think that Maria was making, I think that's a good one, is about focusing on trying to solve a specific customer need. We just, Walmart just launched in Mexico our new mobile wallet. It's called Cashi. And you have to understand the needs of the Mexican economy and why this solution was launched and why it works there. In Mexico, over 2/3 of the Mexican consumers are not banked, and it's been that way for a long time. So it's kind of become a cultural phenomenon for them. My dad wasn't banked, my grandparents weren't banked, I'm not banked, I'm not a banked person. So people have kind of removed themselves from kind of the banking services. What are the implications of that? They're not able to shop on Walmart.mx, but also they're not able to participate in Netflix, Spotify, Uber. There's a whole digital commerce out there that these persons are self-selecting themselves out of because they're not participating in the banking system. So when we launched the Cashy service, it's an opportunity for customers to come into our stores, bring us their cash, we'll put it into our wallet, then they can use that if they want to shop at Walmart.mx. They can use it to shop in the store as well, but even more importantly, they can then use it to use Uber services, Netflix, Spotify. It opens up the digital world to them. They can also pay their water bill, their electricity bill, their phone bill. All that's happening as we're trying to provide this specific service to this important market segment in Mexico. Something like that wouldn't necessarily work in a market like Canada, but again, you need to find and understand what the needs of your customer base are as you're trying to provide a service for them.
So I actually have a question that's kind of the Canadian perspective on the whole thing. And part of the issue is there's obviously massive innovations in payment technologies all over the world. Where do you see Canada evolving to? I mean, with all of this stuff happening all over the world, what's the role for Canadian innovators? Do you see any at all, or is it just going to be one of those things where the world is flat and speaking of frictions being low, we can simply adopt innovations? Any one of you perspectives on what's happening, like borders and?
I think from our Home Depot perspective, being a part of our large organization, the U.S., we do lean a lot on direction from our U.S. big brothers in terms of how the security goes. I think for us, it goes back to some of the comments the other panelists said. It's about trust and reputation, and our willingness to trial different things starts with the leadership side, right? And it's a cultural mentality, kind of like what Mark was again speaking about agile, and like, are we willing to test and learn our way through things? Eric Schmidt used to talk about 70% of the time working on your core business, 20% being on adjacency, and 10% just trying new things and experimenting to actually get it far enough ahead. Some of the crazier moonshots or sexy things. So I think there is room for it. Innovation can come from anywhere. We've seen a lot of the tech companies in Canada stand up in being global players. So I don't think there's much of a prejudice on that as much as might have been in the past. So there's just a lot of talent here. It's just getting that right story and ensuring that the companies are embracing and willing to test.
I actually think that there's a great opportunity to bring the Canada culture of collaboration and a lot of startups and a smaller environment. This is where it's to your benefit, and a global platform, which Canada is. And I've had a global perspective in my past experience, I had global responsibilities, but bringing that global perspective to this particular space, payments, with a tight ecosystem between banks and just everyone in the country, being able to collaborate on solutions that solve problems for consumers and merchants and businesses, and being able to incubate it here, incubate it with other parts of the world, and then bring it to other larger markets that may have a particular bias, the U.S., because of the dysfunctional ecosystem, that's the nicest way that I could put it, in the U.S. between all the players. This is a functional ecosystem in Canada. I've always thought this in many years, and so I think that Canadians can use that to your advantage, and startups can use that to your advantage, and banks that also work across the border use it to your advantage.
We have 90 seconds.
I completely
between
agree.
The three of us. So here's what I'm going to do. We'll park that for just a second because I'm going to give you 30 of those 90 seconds for closing comments, right? And the closing comments are, I wish. Complete the sentence. And that could be anything. We've talked a little bit about your wishes, but since you were about to agree with Maria, we'll let you agree and then complete your wish list.
Sure. I wish that cost was not a friction so that we could all focus on the new opportunities that exist with data. I completely agree that data is the new oil, I think someone said earlier. And I think the opportunity for us to share the data that we have could create experiences for our customers that would really transform the industry and Canada as well.
Maria, 30 seconds.
I wish the same. Cost is such a big barrier for merchants. I think we have to figure out how to solve that. That's it.
I would say cost as well, but I really wish we could move faster across the organization to solve the problems. Customers are accelerating their desires and their expectations, and for me, it's like, how do you move faster across all parts of our business to deliver the experience that they deserve?
We still have 8 seconds left.
my
We'll
goodness.
be done in time. What a concept. Thank you, fabulous panel, Andrew, Mario, Maria. This was amazing. I know we don't have time for questions from the audience, but we will all be there at cocktails.
And the
Probably
game.
busy watching the game,
Yes.
but corner us and ask us any questions. Thank you all very much.
Thank you.